Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets behind corporate filings and let you in on what they really mean. This week we are diving deep into the world of digital assets with WisdomTree's filing for their XRP fund. Now buckle up because this is not your typical stock report. There are some wild risks and regulatory tightropes being walked here. And hey, if you appreciate getting straight insights from these complex documents, make sure you're subscribed and join our Discord community linked in the description below for more. This is a registration statement, an S-1 form specifically. Think of it as WisdomTree's official introduction of their XRP fund to the public. They need to tell the government everything about it, its goals, its risks, and how it will operate. It's like a detailed product manual for an investment. They are essentially saying, hey world, here is this new investment product we've got, and here is why you might want it. And by the way, here are all the ways it could go wrong. WisdomTree is creating an exchange-traded fund or ETF that will track the price of XRP. XRP is a digital asset, a cryptocurrency, if you're not familiar, a bit like Bitcoin, but with its own unique purpose. This fund aims to let investors easily get exposure to XRP's price movements through their regular brokerage accounts without having to directly buy and hold XRP themselves. This little checkbox is actually quite important. It means this isn't a one-time offering. They plan to continuously create and sell shares of this fund. This is typical for ETFs because they need to be able to create new shares as demand grows and redeem shares when demand falls to keep the fund's price closely aligned with the value of the XRP it holds. This is a critical distinction. This trust is not a mutual fund and it is not regulated like one. This means fewer protections for investors. They are also not considered a commodity pool under the Commodity Exchange Act. That means the big regulators like the CFTC are not overseeing this as they would a futures contract. This lack of regulation can mean more risk, and they are not kidding about that. This document is packed with risk factors. They are really hammering home the speculative nature of this investment. They're saying this might not be suitable for you if you can't handle big potential losses. Now let's dive into the meat and potatoes of what this trust is actually investing in XRP. This section is all about XRP itself. They explain that XRP is a digital asset that runs on the XRP ledger, a kind of digital public ledger like a shared spreadsheet that records all transactions incredibly fast and at a low cost. The main idea behind XRP is to make cross-border payments quicker and cheaper than traditional banking systems. This is a key difference between XRP and some other major digital currencies like Bitcoin. All XRP that's ever going to exist was created back in 2012. This fixed supply can affect its price dynamics significantly. They mention that founders of Ripple Labs, a company associated with XRP, held a large amount of XRP initially. To figure out the value of XRP, the fund will use something called the CoinDesk XRP Price Index, or the reference rate. This index is an average price calculated from major XRP trading platforms. It uses real-time prices to give a good picture of the XRP market. They go into detail about how this index is calculated using trading volume and price variance. This is where things get spicy. They extensively detail the regulatory risks associated with XRP. There have been legal battles. The SEC has sued Ripple Labs accusing them of selling XRP as an unregistered security. The outcome of these legal fights is still uncertain and could heavily impact the price of XRP and therefore the value of this fund. They even mention that a determination that XRP is a security could make it extremely difficult or impossible to trade. They also highlight the inherent volatility of digital assets. XRP, like many other cryptocurrencies, has seen wild price swings. This means the value of your investment could drop dramatically and very quickly. They explain this volatility is driven by market sentiment, regulatory news, and technological developments. And then they talk about the trading platforms themselves. Many of these platforms where XRP is bought and sold are not regulated like traditional stock exchanges. This lack of oversight increases the risk of fraud, manipulation, and security breaches. They even reference past events where major trading platforms like FTX collapsed, underscoring the risks. Let's talk about the money side of things. The fund will charge a sponsor fee, which is a percentage of the fund's assets. This fee covers marketing, administrative, and operational costs. Importantly, the sponsor WisdomTree Digital Commodity Services, LLC, has agreed to pay for many of these expenses out of this fee. However, there are certain non-recurring expenses not covered, and since the fund holds XRP and doesn't generate income, it will need to sell XRP to pay for these additional costs. This means the amount of XRP represented by each share will decrease over time. This is a really important point because the fund has to sell XRP to pay for its fees. The actual amount of XRP each share represents will go down over time. Even if the price of XRP goes up, the total value you hold might not because you own a smaller fraction of XRP. This is not uncommon in crypto ETFs, but it is something investors need to be aware of. Another interesting point is how the fund's actual trading price on the stock exchange can differ from the underlying value of the XRP it holds. This is partly due to different trading hours between the stock market and the 24/7 crypto markets. This difference can lead to shares trading at a discount or a premium to their actual value. The sponsor WisdomTree Digital Commodity Services LLC is a subsidiary of WisdomTree Inc., a company with a history in ETFs and digital assets. They have experience with Bitcoin ETFs and ETPs in Europe holding digital assets. They are leveraging this experience for this XRP fund. However, they do point out that its management has limited experience operating this specific type of investment vehicle within the United States. And that lack of extensive direct experience is highlighted further. They are not registered as an investment company under the 1940 Act, which means fewer investor protections. This is not a traditional mutual fund by any stretch. When it comes to management and shareholder rights, the fund is quite different from a typical company. Shareholders have very limited voting rights. The sponsor has a lot of control. This structure is designed for efficiency in the digital asset space, but it means less direct say for investors. So what is the bottom line here? WisdomTree is launching a new way to invest in XRP for the US market. It offers accessibility through traditional brokerage accounts, but comes with significant risks. The regulatory uncertainty surrounding XRP is a major factor. The volatility of XRP itself is also a huge factor. You have the inherent risks of digital assets layered on top of the specific risks of XRP, its technology, and the platforms it trades on. Now, looking at this filing as a whole, the sheer volume of disclosed risks, including those related to regulatory actions, market manipulation, and platform failures, is extensive. This tells us that WisdomTree is being very careful to disclose potential downsides. The fact that the amount of XRP per share will decline over time due to fees is also a critical financial detail that directly impacts long-term returns. The fund aims to track XRP's price, but the expenses and the fixed total supply of XRP introduce complexities that could lead to underperformance compared to simply holding XRP directly. In conclusion, WisdomTree's XRP fund aims to democratize access to XRP, a digital asset focused on payment utility, but it is a product for sophisticated investors comfortable with high risk. The regulatory landscape remains a significant hurdle, and the volatility of XRP means potential for substantial gains, but also significant losses. The fund is structured to operate in a nascent and largely unregulated market, which inherently carries more risk than traditional financial products. It is essential for potential investors to thoroughly understand these risks before committing capital. Alright, that is our deep dive into the WisdomTree XRP fund filing. What are your thoughts on this type of investment? Do you think the accessibility outweighs the risks? Drop your opinions in the comments below. If you found this breakdown helpful, make sure to hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description for more insights and discussions. Thanks for watching, and see you next time.